It's almost 6 p.m. in the evening, and it's almost 5 hours since Pranab Mukherjee finished giving his budget speech, and we have already put up on the site two video clips, which are, one of them is talking about the tax proposals, the second one is talking about markets and the budget proposals, how we should be adapting to them. Now, in this third clip, we are going to now talk about what kind of budget impact will be there for people who are investing in insurance policies. I mean, people who buy insurance policies both for the cover, life insurance, and also use it as an investment vehicle. Now, with me is Sunil Dhawan, Associate Editor, Outlook Money, and in the next couple of minutes, we'll try to figure out what are the implications the budget proposals have as far as insurance investors are concerned. Sunil, are there some small sort of things that have come up from the budget as far as insurance buyers, existing and potentially new buyers are concerned? I think the implications are small only.
Correct, very true, because this budget we have seen, there is no change, there is no direct impact on the life insurance or the health insurance industry and the way that we keep buying our products. But just if we talk about unit linked plans per se, the existing policyholders or the new policyholders of ULIP should continue to look at ULIPs as a long-term investment vehicle, savings product. And just two small, very small things that have come out in this budget is, one is the impact on the fund value of a ULIP. Now, how earlier it was like the charges deducted from the premium and collected by the insurance companies were subjected to the service tax, which the industry felt was not giving them a level playing field with the mutual fund companies, because in the mutual funds the service tax is only on the fund management charge. So in this budget, that anomaly has been removed, and now in both cases, mutual fund as well as ULIP, the service tax will be levied only on the fund management charge. In ULIPs, it is also on the mortality charge. Now, the direct impact of this will be on the fund value, which is supposed to go up a little by, let's say, 0.5% to 0.75% in some cases. Also, in case of the commission that the insurance agent earns, now when he gets the commission, and if the amount is increased, is more than 5,000 rupees, it is subjected to service tax. Now, that amount has been increased to 15,000. To some extent, this will also give some benefit to the agent workforce and reduce the paperwork also for the companies.
Anything else that has come up?
More or less, no. This is what the industry.
So basically, Sunil, not much has really changed in terms of the basics. You know, if you're a ULIP sort of buyer, existing buyer, you keep doing what you were doing. You're supposed to do it in any case.
Absolutely.
And as far as a new sort of investor is concerned, basically ULIPs, as we have been saying in Outlook Money, that it's a long-term product, and you buy it only if
buy it for the right reasons,
right,
and link it to your financial goals.
Yeah, link it to the financial goals and stick on to it for 10 years plus, ideally the whole tenure.
True.
So that hasn't really changed.
True.
In terms of whether after the budget the equity markets go up or down,
right.
It's immaterial. You keep putting in money regularly.
Absolutely. One important point that comes out in this is, maybe because of this budget proposals, there could be some direct impact, positive impact to some sectors. But as a ULIP holder, one should not look at the thematic funds within the fund options and should stick to a diversified fund option, because we feel that somebody who is going to buy a ULIP is actually looking to play very safe and not be a very aggressive investor like in case of a mutual fund. So one should stick to the diversified.
So that is not the choice one needs to exercise.
Correct.
And if one is is a young person, or it's early on in the tenure of the ULIP, you go for a maximum equity sort of exposure. And as you come towards the end of the tenure, you sort of move on to a lower,
less volatile options like that.
Less volatile sort of debt sort of option.
Right.
Sunil, anything that's come up on the health insurance one? Nothing.
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 Just that section 80D limit remains the same. What the budget has said is they have increased the scope of the section 80D to the CGHS employees also, the central government employees. Now, earlier they were contributing the premium towards that health insurance plan. Now that premium will also qualify and come under the same 80 section D, section 80D benefit.
The other thing that's not linked with the budget, but here it's really important in a clip like this, is to reiterate the fact that one shouldn't be buying insurance for tax savings. It is insurance primarily is to cover your life or your health or other risks. Yeah, if you're not a disciplined investor or whatever, you don't feel confident, then you go for a investment come insurance product.
True.
That's been our standard.
Especially this time, because now we have seen that there will be certain increase in the saving, the surplus that a salaried employee will have. Now one should be very careful in putting that amount of extra savings into the right places, right investment products based on his own risk profile and long-term goals. So that extra savings should not quickly move into the life insurance products or any that kind of a product which is not linked to your financial goal.
So the message is very clear that the budget proposal, there isn't any big time change as far as your insurance buying or insurance come investment sort of products. So you just need to do what you have been doing in the past and not get hassled by what's happening around you, and keep following some of the basic things that we have just talked about. Thank you so much.